Welcome back. So as Prashant told you just before the break, the one silver lining for India continues to be the fall in oil prices. In fact, if you're looking at the price on the screen even now, it's again crept back above the 60 mark. That's Brent. However, there was a slight dip below that as well. The market continues to weigh in the prospects of perhaps an extension of some of these OPEC cuts. But for what it's worth right now, 60 on the screen, Prashant, is much better than 70 on the screen for us here in India.
Yeah, and I'm just going to put up some graphics and some points here, which suggest that the 60 could actually become, who knows, 50. Maybe under 50, right? So we'll talk about the fundamentals with the S&P Platts guest in just a bit, but the technicals on your screen. Just 3 points basically, and these are all sort of potential setups. This has not already happened, so we'd want to watch out for the weekly close on WTI oil. I'm talking about NYMEX, which is around 51 or so at this point. So not Brent, but WTI. And what are we watching out for? If WTI oil, actually, let's just put the graphics back on. WTI oil is set up for its first weekly close below the 200-week moving average. This is the first time. If it happens, that is. For that, we'll have to close below the 52-odd level. If we close below 52-odd this week, essentially, this is going to be the first close below its 200-week moving average since November of 2018. That's point number one. Second, we are set up for another bearish outside week. Again, the sort of cutoff for that is about around $50.5 or so, right? So all of these levels around the 50-odd mark on WTI. If we do get a close below that $50.5 per barrel mark, it's going to be the third bearish outside week in the last 8. That's going to be quite something. Then a retest of the horizontal support at about $50.5 a barrel. As I said, they all converge around this $51 level. So as I said, these are all things we need to watch out for as far as tomorrow's close is concerned. Weekly matters more than daily, monthly matters more than weekly, etc., etc. So, and I'm just focusing on the weekly setups here. I don't know if all of them will happen. One of the three will happen. But what I'm highlighting is that looking at this, you can perhaps imagine more downsides as far as oil prices are concerned. So that's just technicals, really. We'll have to kind of sort of take a fundamental perspective on things as well. But this these are not bullish signs. These are most certainly bearish signs, but they have to be confirmed with those closes.
Okay, all right. So those are some of the technicals on oil. Let's now get to the fundamentals. We have Kang, head of analytics Asia at S&P Global Platts, joining us now for a chat. Kang, pleasure to have you on the show. Thank you for joining in. So there's clearly a lot of oil slushing around in world markets. I was just reading that apparently the U.S. commercial, inventories, commercial production right now is above a 5-year average, which is a norm for this time of the year. The EIA has cut down its forecast of demand for 2019. How bad is the demand-supply mismatch, first of all?
Well, thank you for having me in the first place. On the demand side is a lot of signs of weakening. We're still having a growth of 1.4 million barrels per day on average for this year. It's weaker than last year, but still quite a bit of volume that is needed. The most important thing is currently the market sentiment is very bearish. People worry about the state of the economy and worry about the outcome of the escalation of U.S.-China trade war. Since we talk about fundamentals, on the supply side, there are also some risk, which the market is not fully incorporated or taking right now. The market is more concerned about demand. On the supply side is we are after the end of the sanction waivers by the U.S. on Iran crude oil exports. It so happened that it was a high maintenance of refineries last month, but June, particularly for July, we are entering a season that the driving season is here, and the demand for gasoline and some gas oil will be stronger seasonally, and in the meantime, the maintenance has been coming down. step by step. So it seems to be in a juncture that supply is heading towards a little bit tighter on the basis of the recent developments. But again, this is overshadowed by the concern over demand. So the fundamentals are still there. It's not all sort of bearish, but obviously, day-to-day price fluctuations are driven by the investment climate and driven by the market sentiment.
What can, at the margin, Mr. Wu, change this, one way or the other?
Yeah, at the margin, actually, if we look at the fundamentals, that traditionally the driving season means higher demand and driving up the refining margins and also driving up the prices for crude oil. And this year in particular, even though OPEC and Saudi Arabia in particular every year prepare for this seasonal demand, and this year there is more requirement on the part of the OPEC other than Iran and Venezuela, whose production has been done. It's more requirement for other OPEC to keep up the production to meet the demand. So the turning point is we actually see June is a turning point. That coming to July and August, prices supposedly on the fundamentals will just it will firm up, heading back towards the upper end of the 70s. So that's how we see in the very short term, July, August, that there is the fundamentals suggest that the market is getting a little tighter to change the current dynamics.
Oh, that's a very interesting point you're making, Mr. Wu, because you are forecasting a return to the 70s on Brent as early as August. Now, does this factor in continued cuts? Because we'll have OPEC meeting and then the OPEC Plus group, which includes Russia, they'll also meet, I think, in July. So is this forecast factoring in an extension of these supply cuts?
On both supply and demand, very interesting that end of June is two major events happening. One is OPEC, whether or not they are going to extend the production cuts. Of course, the production cuts extension this time is a little bit different because of on the basis of the huge decline of Iranian crude production and exports and Venezuelan issues. Even the same cuts means some of the member countries of the OPEC needs to increase a bit. So overall, the production cuts is kind of likely. So that is one of the supporting factors, you would say, in this kind of overall bearish environment. Another factor I want to mention is another, right 2 days after the OPEC meeting will be the G20 meeting in Osaka, June 28th, 29th. That's where all the eyes are on China and the U.S. So the Central Bank of China governor and the Treasury Secretary are meeting each other now. But at the end of the year, if President Xi Jinping and President Trump, whether they're going to meet or revert, the trend of these trade tensions is very is a key point to watch. So it could move in both directions, and if they temporarily sort of have some kind of agreement, that may change one of the most bearish factors among the on the demand side. So end of the June is indeed a very important time to watch, and the events will influence the market.
You called it a turning point in that sense. Just to be sure, Mr. Wu, you are forecasting Brent oil past $70 sometime in July and August, right? You're saying that fundamentally prices should reach there.
Yeah, what I really meant to say that the price will move in towards 70.
Okay.
July, August.
Okay.
So kind of moving from 60 towards the second, higher end of the 60 towards $70.
Okay. Fair enough.
For Brent in particular.
Fair enough.
Right.
Mr. Wu, thank you very much. Appreciate you joining us. And great speaking with you with that sort of quick commentary on where oil prices may be headed. Though, Surabhi, there is still time. I mean, end June is still 15 days away. So we might get to 50 and then go to...
I hope so, because we started off the show by saying there's one silver lining at least, and that's oil. And if Mr. Wu's right, and if this thing is going back to 70,
it's all
then...
about time frames, right?
It's all about time frames, yeah. So right now, the time frame tells us that we need to take a very quick break. When we come back, we will be discussing market technicals with Ashwini